Now let's meet our first guest today. And equity crowdsourced funding has increased by 82% in the 2022 financial year to $86 million, backing nearly 100 companies, according to new figures from Birchal. To take us through those figures and the outlook for crowdfunding in the new financial year, we're now joined by Startup Daily regular and Birchal co-founder Matt Vitale. Matt, great to have you back on the show. I know you guys are just celebrating a few milestones for Birchal, but looking at these numbers, you must be pleased, especially given that whilst we were still going barnstorming in the second half of 2021, there was an overall slowdown in 2022 that it would seem crowdfunding defied as a trend.
Yeah, look, thanks, Simon. Great to be back on the show. It's been another really strong year for equity crowdfunding, and as what we do is still fairly new in Australia. There's a lot of growth just from the increased awareness and utility of what we do. I'd say, look, we haven't been totally immune from the slowdown. There's usually a really big spike of activity before the end of the financial year every year, and I think, as you've seen in the report, some of the growth has been a little bit slower in the last quarter of the financial year, but all in all, a really strong result, and a good kind of lead into FY23, the new financial year, and hopeful that we're going to be able to stay open. I think when a lot of other fund managers are taking their foot off the pedal or probably revising things, that there are still opportunities for all types of businesses to find believers and raise capital and stay in the game and execute their plans in what is otherwise a choppy environment.
Now, of course, Birchal is the market leader in a way that I bet anyone in the Tour de France wishes they were leading the peloton. I think it's around about 70% of the crowdfunding, 73% of the total cash raised. You had some incredibly strong segments, but I'm really interested in breaking down where people are coming from for crowdfunding. And this year, food and beverage took up around about a third of the total raised.
Yeah, that's right. And it was clearly the big leader in terms of categories. I think the thing that's sitting behind that is beer and alcohol businesses accounted for just over half of the total raised under the food and beverage category. So, probably an argument for a subcategory in and of itself. But craft breweries had a pretty quiet year a couple of years ago, particularly coming through COVID, which is not that surprising, but they've come back with a vengeance, which is great. These are great businesses to be involved in, lots of exciting businesses and strong brands in the environment. But a lot of really interesting stories, particularly with the craft beer industry. There's been some high-profile acquisitions of craft brewers over the last few years, and some really big names, which really kind of brings into question what it means to be an independent brewer these days. And I suppose, looking long-term, equity crowdfunding is another source of capital for what are pretty capital-intensive businesses. We're hopeful that these businesses will be able to remain independent for longer and really ensure that we have a thriving and diverse craft beer industry. But yeah, food and beverage really predominated by alcohol and beer-related campaigns.
I suppose if you're lucky enough to have an exit somewhere along the way, no one should begrudge them that. And of course, there's always someone, especially when it comes to craft brewing, I think, willing to step in and take their place. Sober, I would point out too, the trend around non-alcoholic beverages has been an important part of that as well. They were the one of the crowdfunding campaigns last year that was successful. The interesting thing that really started to stand out this year, I think, is sustainability. It captured around about 15% of the total capital raised, more than 8,000 investors and 9 SF offers along the way.
Yeah, a really exciting development. Sustainability has always been a really strong category. I think this year in particular, though, certainly after the election, there was a lot of companies that are in this space that were thinking about opening offers and were probably a little bit uncertain, as you would imagine, about the policy direction post the election and so on. But we had some really stellar results. Lion Hydrogen, so they're funding a hydrogen project in Tasmania, which we're really excited about. They raised $1.5 million. Grong Grong Solar Farm, they raised their maximum target of $750,000. This is an opportunity for people to invest in a solar farm. And Indigo Power, another one, renewable focused energy retailer in regional Victoria. They came back for their second raise, raising just over $1.2 million. And it's really nice to see that there are a lot of these opportunities brought to the market. Retail investors can get involved in, but people just looking to, I suppose, support the growth of our renewable energy industry in this country, and hopefully more to come.
Matt, I think the other thing that stands out in this is that we're talking about $86 million last year, when over the past 4 years that crowdfunding has been in place, it's $185 million in total. Around about 110,000 investors. I think there was something like 43,000 this year. So again, nearly half of that total. Do you think you can repeat that growth level, which is quite astronomical in FY22, in FY23?
We're going to be doing everything we can to maintain this. I suppose in looking at the growth or the potential of the crowdfunding industry in Australia, it's helpful to look overseas at some relevant precedents. The UK is one; it's probably the most mature industry of its type in the world. The United States has been growing very quickly over the last few years, and certainly during the early phases of an industry, there's been quite high growth year on year. I think Australia's compounded annual growth rate has been about 70%, so this year's a little bit higher than trend. This all assumes that the macro conditions, I suppose, will be right for people to still investing in these opportunities. And looking at what happened in the UK, particularly around 2016 and others, it shows that equity crowdfunding is fairly resilient. And I think it is because it is new, it is founder friendly, it's accessible, and more people are kind of seeing this as an opportunity to get involved in early stage businesses as an asset class. But it's not just about doing more deals and growing the industry. For us, we want to see businesses succeed and really close that loop and start to return capital to investors. And then, there's been a few instances of these, but as these vintages mature, I think those expectations will grow. So people can look to investing in early stage businesses as a great way to build wealth and an important part of anyone's portfolio.
Matt, given that crowdfunding is often about retail investors writing small checks to back these companies, can you tell us a little bit about the growth in terms of how much are people putting into each company on average?
Yeah, look, the average is still holding fairly true at about $1,600-$1,700. But I think although retail investors is probably the unique feature of what we do, I don't think it's true necessarily to say that they are all retail investors. Quite a significant amount of funds that's invested, certainly through Birchal, come from professional and wholesale investors. And the feedback that we get a lot of the time is the level of disclosure for these offers, needing to be produced at a retail standard, is far better than what a lot of professional investors are seeing with private unregulated IMs and such. And that more and more professional investors are really looking at equity crowdfunding as an easy way to get access to deal flow. Certainly anecdotally in the UK, larger investors were finding things on crowdfunding platforms that they weren't able to see in their own networks, and that experience is starting to be borne out here in Australia as well. And it's very efficient, and the check sizes can be far lower. So I think often people look at early stage investment, startup investment as an asset class and needing to take a portfolio approach. But without crowdfunding, the minimum check sizes would be in the tens of thousands of dollars. So it's far more expensive for people to build a sufficiently diversified portfolio. That's far more achievable with crowdfunding. We'll host an offer with a minimum parcel size as low as $50. So, conceivably, people can build a diversified portfolio for a few thousand or tens of thousands of dollars, which, we feel is a pretty significant development.